Hello everyone. This is a short educational video that covers certain aspects of late employee deferrals within an employer-sponsored retirement plan. My name is Caitlin Schaefer, and I will be going over these late employee deferrals with you. We are going to start with our agenda. Today's agenda, we will begin with defining what an employee deferral is. Next, we're going to take a look at what is considered a late employee deferral deposit. And finally, we'll end with how to properly correct late employee deferrals. So what is an employee deferral? An employee deferral may also be called an employee contribution, elective deferral, or Roth elective deferral. These contributions are amounts being withheld from an employee's paycheck that are submitted into a retirement plan on the employee's behalf. Typical examples of these contributions are pre-tax employee contributions, which are amounts being withheld from an employee's paycheck pre-tax, Roth employee contributions, which are amounts being withheld from the employee's paycheck after tax, or any 401k or 403b employee loan payments. Next, we'll take a look at what constitutes a late employee contribution. Plan sponsors are required to ensure that participant contributions are deposited into a plan's trust on a timely basis as a part of their fiduciary responsibility. For plans that have fewer than 100 participants, the Department of Labor has created a safe harbor rule. This rule states that employee deferrals and loan payments will not be considered late if they are submitted within 7 business days following the pay date. The pay date would be the date that the check is issued to the employee. Employers that sponsor a large plan or a plan with over 100 participants are not able to rely on the Department of Labor's 7-day safe harbor rule. Instead, they are required to submit employee contributions by the earliest reasonable date. Unfortunately, the Department of Labor does not have a definitive time to determine what they would call a reasonable date. They do, however, stress that you need to stay consistent. For example, if you have determined that within 3 business days of the pay date is the earliest reasonable date you're able to submit employee contributions, you should always submit employee contributions within those 3 business days. Consistency is key in this. It is also important to be aware that if a retirement plan is audited, the Department of Labor or IRS may have different opinions on whether an employee deferral submission should be considered late. Now that we have a general understanding on when a contribution is considered late, we will go over how to correct late employee deferrals. The first step is to submit the employee contributions into the retirement account as soon as possible if you've not already done so. The second step is to make up any missed earnings on the late employee contribution. This allocation is required because participants are considered to have lost the opportunity to earn that investment income on those funds that were not deposited on a timely manner. The late employee deferral amount is required to be reported on the annual Form 5500. RPC will help with this correction process. We are able to calculate the missed earning amount for you. We'll also prepare a missed earning document for you to review, sign, and return to us. This will authorize the funding and allocating of those missed earnings to the applicable participants, as well as to document that the late employee deferrals were properly corrected. Once the missed earnings have been made up, RPC will prepare a Form 5330 for you. This will calculate the excise tax required by the IRS to be paid on those missed earnings. We will send the 5330 form to you for signature, and we'll then file the form for you with the IRS. The third and final step is to review your current procedures and make any necessary changes to prevent future late employee contributions. If RPC is your third-party administrator, employee deferral submissions are reviewed during the annual compliance review each year. We will contact you if there are any payrolls that were submitted past the recommended time frame and help you to get those corrected to make sure your plan remains compliant. This brings us to the conclusion of our video. If you have any questions, please feel free to reach out to your designated compliance consultant. If you're unaware of who your dedicated contact is here at RPC, you can contact our customer service team toll-free at 877-800-1114. Thank you for listening and have a great day.